Hey everybody, welcome to Trading Capital's Daily Analysis video. It is Thursday, May 19th, jumping into the S&P 500 here. Basically, the S&P 500 finished down despite it displaying a green candle. And this is the importance of knowing candle formations and how the price action opens and closes and rallies and finishes on the day. But overall, the S&P did finish down by 0.6% and the Nasdaq finished down by just over 0.5%. So taking a look, we're still holding this major pivot low. We did close below this parallel channel. So technically tomorrow is confirmation day for the S&P 500. Basically, you don't want to see another down day with heavy volume, which confirms the downtrend and likely to keep breaking lower. That being said, I still think we're due for a bounce. The reason why I think we've had this hard day of selling and whipsaw price action, if we flip to the intraday chart here, the reason why we've had this whipsaw price action and hard institutional algorithmic selling is because of options X, in my opinion. And there is that max pain level that the markets and specifically retail traders will lose on their options play if the institutions drive it to a specific level. And I think that's what we've seen here, just based off of the real controlled strategic selling that took place yesterday. And look at this tight whipsaw range. We've had this crazy range here for these spiders trading in and whipping around this almost this parallel channel here. And what's interesting to note is there were many intraday opportunities to play this for these reversals, but when you see this type of reversing, this is designed to trigger people's emotions and spook them out of your positions. These type of reversals back and forth is not a healthy price movement, and it clearly demonstrates to myself that there is manipulation in the short term occurring. Now, the bullish short-term factor is that we do have a series of higher lows on the S&P 500. You will notice that this pattern is forming a bear flag pattern, and most of these patterns favor a break to the downside once the pattern is triggered. However, I just think that there are some key technical gaps all the way up here and all the way up here that are still likely to get filled, and once the options X contract expire and put a lot of bearish sentiment on the markets. And let me be clear, the sentiment in the market is extremely bearish after this hard sell-off, and the fact that we have seen so many recessionary headlines, bearish headlines, running out of gas, high energy prices, all these crazy headlines that have been spamming across people's news feeds and televisions have really incorporated this manipulation in the price. And it just occurs to me that there's a lot of manipulation going on in the short term to potentially spook people out of their long position. I'm not in the camp that I don't think the markets are going to crash. Sure, there's always that probability of a potential crash, but it's very difficult to essentially bet on the crash of the market because it really only happens once in a blue moon. So in terms of if I had to assign a probability of an algorithmic crash, and a crash is probably like 10% down on the spiders in one day, which we've seen. But I think the circuit breaker is 7%. It gets triggered, and then there's some freezing in the stock market. No more trades are processed at that time for I think a 10 to 15 minute window. But sticking to the point, assigning a probability to a crash, I would say there's probably a 5 to 10% probability of a crash. I think there's more likely of an oversold bounce to occur and continue. If we flip to, let me just take care of some of these trend lines here. If we flip to the daily chart on the spiders, we did cover it. You are trading just below the parallel range. Again, to reinforce the first level of resistance, I think you come up to here. This is essentially your major pivot zone where you're likely to retrace to. And then if you get through that, this will be your next zone, your zone of consolidation before breaking down lower. There is a gap on the chart that was left unfilled, so that's another reason. If we just simply drag this trend line up a bit, that's another reason why I do think you can potentially rally upwards and fill that gap before the next down leg starts. It does coincide with a falling US dollar as well as falling short-term rates. At the moment, the US 10-year has started to pull back and is forming a mini head and shoulders that does take it to down to the range of potentially 2.5%. And I'll just pull that up quickly just so we can quickly keep an eye on the importance of understanding the bond market. So taking a look at rates, we've been trading in this channel. You are testing support at the channel, but notice how you have made this formation here, this topping formation, which we've seen many times, especially in recent months, as many asset classes are putting in these topping formations. Essentially, this is going to be your neckline right over there, which you can see that you triggered, you pierced it, but you have to have confirmation below the neckline, and we have not received that yet. But it is likely that you break this head and shoulders formation. Once you get confirmation from the neckline, the max downside move takes you to the 2.38% area. So that's well in line with this consolidation period between the 2.5 to 2.3 area. So just keep that in mind. If rates do fall and the US dollar falls at the same time, it should lift gold, it should lift silver, and the US equities overall should get a short-term relief bounce as people move more into the risk-on assets. The risk-off assets like tech and small and mid-cap tech. And if we flip to the QQQ, the NASDAQ, same thing. It is holding a little bit more relative strength. You are still keeping this major pivot low here. You're trading still within the parallel channels that we were trading in for several months. And I do favor a bounce up into the minimum of this trend line and then testing these secondary pivot zones here, this initial chop before breaking down. And if we flip to the intraday basis, you also have a couple key gaps, just like the spiders, up at 306. That's a likely one to get filled. And then this 328, I think, is definitely a potential and more of a max move in terms of getting a bounce out of the spiders. So we'll just have to monitor it each day. Options X is tomorrow. So once tomorrow all the options expire worthless, the volatility should calm down as we head into the next trading week on Monday. Actually, on Tuesday. I think Monday's a holiday in Canada, but nonetheless, as we kick off next week, the volatility should decrease, in my opinion, and we should be able to spot some new trends, some short-term trends that I think we're positioned to capitalize on. And then let's take I just wanted to keep touching on tech. So today we saw relative strength in the IWM, the Russell, which is a basket of the 2,000 small and mid-cap stocks. So the Russell actually closed positive on the day, and the relative strength came from the likes of PayPal, SoFi, which we sold today, and banked a beautiful... actually, I didn't issue that one to the group. That was one of my personal ones. But SoFi I ended up selling in one of my other swing accounts, one of my managed accounts for one of my other clients. So sometimes I get those mixed up. But nonetheless, SoFi we sold. That was up big on the day. PayPal was up big on the day. And then we also had the likes of ST&E, Spotify, Teladoc, SE. So there were many small to medium cap tech stocks that were showing a lot of relative strength, and that's part and parcel to the fact that they have been beaten down to a pulp over the last 6 to 12 months. Some of them are down, 70, 80, even 90% from the highs. So the fact that they're showing signs of strength in a falling market where the big cap tech is falling and some of the likes of consumer staples are getting decimated and the variety of the other leading sectors, it just shows that there's potentially a good short-term low on many of those names to trade against. Now, if we do go into a full-blown recession, which I think we will over the next coming months, those could potentially make new lower lows along with the spiders, the QQQ, and the bigger caps like Apple. And that's the thing, when you start having these big caps like Apple, Microsoft, Amazon, Google, which I do think have more room to fall, that's when the markets really find themselves under pressure. And then you also have the leading sectors falling out of favor, like consumer staples. And energy is still holding in there, but it's only a matter of time. Once all the other sectors fall, they tend to grasp on the leading sector and will drag it down with the market. That's just how a recession or bear market works. Let's take a look at natural gas. Jumping into the intraday action on natural gas, I've been watching this channel here. We've been ping-ponging. You came up to the center point of this channel, pierced that yellow resistance line again for the second time, put in another beautiful topping tail on an hourly basis, and then collapsed late to the end of the day. So we'll dissect natural gas's price action a little more in depth because I think it's really intriguing what is transpiring in front of our eyes. And if we flip back to the daily chart, you can see our longer term trend here, pivot to pivot to pivot to pivot has kept, this is kind of your upper range of your shoulders here, your left and your right shoulder. And you notice you've had that doji reversal candle yesterday. We were looking for a follow through where we wanted to close below unconfirmed volume, and we got exactly that. Now it took pretty late in the day to facilitate that move. We saw natural gas actually push up and was showing great strength early on all day long. It was positive. People were getting shaken out of their shorts and their short natural gas and switching to the long side because they thought it was going to break out. And then late in the day, what do we see? We see the sell pressure come in. And the sell pressure, believe it or not, the IMEX closes at 2:30 p.m. So that's when basically all the final trades are completed. However, there is still algorithmic selling and buying that occurs after the hours. But in terms of humans entering in trades, the big brokerages and firms are complete and are done for the day, and it's all algorithms. And the algorithms had a plan and they executed the sell late in the day. Starting roughly at 2:30, the sell action in natural gas just started, and there was a good chunk of time where it just started to turn negative and negative and negative. So beautiful to see that we closed below this candle with a higher degree of volume. That is really bearish, and that's exactly what we were discussing in yesterday's video for natural gas, and that's exactly what we got today. So when the technicals line up, it just makes you so much more confident. And when these little nuances happen where you get confirmation close below on a heavier degree of volume, that just enhances the probabilities of our trade working out in our favor, and I certainly think it is going to work out in our favor. And to be honest, I think natural gas has just been propped up at these levels just due to options X nature. I think there's a lot of people that have puts on natural gas to expire lower, and I also think there's a lot of people that have calls on natural gas to go higher to that whole number, that $9 number, and test the all-time highs. And I think they've just been keeping it here at the peak of the right shoulder, kind of in no man's land, where it flushes out all of the bulls who think natural gas is going higher, and it also flushes out all of those contracts and as they expire worthless because people think natural gas is going to form that right shoulder and collapse very quickly. I do think it's going to collapse, but I think due to options X nature and many different scenarios in terms of bulls and bears trying to predict the exact price at the exact same time, I think roughly in this range, I could do some calculations later, but this is most likely probably the max pain area for natural gas because it's in no man's land. The people that are in the trade already, like us, but there's also people that are trying to pick the top and pick the bottom. You know, there's bears, there's bulls, and I think being the fact that it's kind of in the middle, most people will be losing on their trade. So really interesting to note. I think we're going to be paid handsomely, especially we could see a reversal going into tomorrow, but I think the price action should hold steady. You know, there might be somewhat of a decline as there is a gap to the downside below, but let's just take a look at UNG. UNG is even more impressive when we analyze it from a daily basis. So we're shorting here at 27.57, slightly out of the money, but with this type of sell action and candle formation, I love it. So we had that initial doji reversal candle on UNG yesterday, and then today we actually pushed higher on UNG, took out yesterday's high, and then reversed and completely engulfed this candle. And this is pretty much, if it was at the all-time high, this would be a beautiful topping tail formation. This is extremely bearish. This shows that it rallied up during the beginning of the day. So we can actually flip to the intraday action. You know, this was basically retail money pumping it up, trying to push it, trying to get it to break out, and then you had even bigger money start to sell. You had that first initial dip, boom. They tried to save it again, the retail. They didn't take out this high. The bigger money realized the weakness and started dumping. So again, we're right at this gap fill here. I definitely think you have a great shot of getting there, but there's tons of gaps on UNG. Honestly, I do think you flush. Once you break this pivot low, there's not really much support in and around here that's going to keep you up. You notice that it's extremely light volume, which is what we've been preaching. You're going to have to flush into your bigger volume area, which is here, and ultimately these green bars here and this red bar here, which is your biggest volume bar, which that'll be your first major area of support again. But I think due to the fact that you have made a series of lower lows on UNG via this megaphone pattern, this broadening formation, I'm in the camp that the probabilities dictate when you look at 1,000 of these patterns, these broadening formation patterns, coupled in with a potential head and shoulder pattern formation, that these break to the downside very hard, especially when you hit the major support level the third time. Triple bottoms are notorious for being weak. Let's take a look at oil. Oil had a pretty big bounce today. US oil, you can see that it bounced on the daily off of this necktie of moving averages. You had the 50 and the 25-day moving average, and you had this beautiful reversal. I still think oil is going down. I would be surprised if oil continues to see its strength. One of the things that I'm watching is what type of weekly close do we get on oil. Tomorrow we'll find out. If oil pushes down, this is yet again another weekly signal that there's tremendous selling occurring at these highs, and that it's unlikely oil is going to push through and test this all-time high. I think you're capped at this weekly close, that weekly close, this pivot, and now this pivot. So if right now you kind of have this weekly reversal candle ready, it would be a lot stronger if this body closes even lower into these candles. If oil does close within or on this 107.35 mark tomorrow, that would be extra bearish for oil, as you would then have a very powerful, yet again another weekly reversal candle. Notice how we have this weekly topping tail on the charts. It would then be accompanied by this heavy red wide range bar to the downside, as well as another weekly reversal candle at these upper ranges, clearly demonstrating that oil and sellers are not going to let oil go above these prices, at least until the cycle has to cleanse itself and starts to the upside once again. I hope all this analysis helps. Let's be on alert for tomorrow's action. Anything can happen. However, I do think most of the selling and buying has occurred ahead of Options X. So that being said, we could potentially see a relatively flat day tomorrow. But honestly, anything can still happen. We are living in pretty tumultuous, crazy times. So we'll just have to watch the price action, let the charts guide us, and stay tuned for more trading alerts. Thank you all for being members and subscribers to Trading Capital. We hope to help continue producing profitable trades and set us up leading into the latter half of 2022.